Hey everyone, Coach Investor back to another video for today. So it's been a long time since I've covered this company, Coupang, aka the South Korean Amazon. If you need a little quick description of what the company does, obviously I've covered this company thoroughly on this channel. If you want to check out the other videos, those will be in the top right corner. And yes, of course, the stock itself is down. Now, they did report earnings. The stock went up around 25% or so because they did record a profit and good margin expansion as well, which the market viewed as an extreme positive, especially in the current market environment. Now, that does not mean that suddenly, they turn the ship completely around and you can expect margin expansion each and every quarter. No, it's just nice to see that they can do this in this quarter in the current market environment, economic environment as well, because Korea also has inflation issues. Now, Coupang being as big as they are, around $33 billion in market cap, having around, I think, $20 billion in revenue in the last 12 months. Valuation-wise, it's not that expensive. Obviously, there's still no real, reason to look at the P/E ratio because there's no E right now, no real E right now. So looking at the price to sales ratio, you're just under 2 times. And so looking at what they mentioned during the earnings call, and during the earnings report, you might find it interesting. Of course, there are lots of interesting companies right now at interesting prices. This is just one extra one. So first of all, we'll have a look at some things that were mentioned during the earnings call, then earnings report, and conclude this video. Now, before I do so, if you enjoy this type of videos, leave it a thumbs up and subscribe if you have not. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So, one question I want to focus on right now is from James Lee from Mizuho Securities. So he asks here, in the US, we saw a mixed shift to services and offline. And just curious what you're seeing, whether you're seeing a similar trend, and also with inflation in Korea, are you seeing any source of consumer trade down? And second question is on EBITDA guidance. Any adjustment to your prior kind of indication? Should we assume that your disciplined approach in investment will kind of carry over in fiscal year 23? How should we think about maybe puts and takes on the profitability levels heading into fiscal year 2023? To that, the CEO answered, as I mentioned in the guidance, I think we'll reserve that for the beginning of the new year, as we did this year. You're right that the underlying strength of the business that we're seeing today, we're encouraged by it. But I think any adjustments to guidance or revisions we look forward to sharing that at the beginning of the new year. And then for the second question, so consumer mix behavior. So they're saying here there's still a small percentage of the overall commerce market that's projected to exceed $600 billion by 2025. The overall retail market in Korea is also showing signs of strength, growing 7% year over year this past quarter, which is reminiscent of the strong growth it had displayed leading into prior COVID. So the overall market is growing. We're still a small percentage of it. You might also maybe like to compare it, if you don't want like the comparison for Amazon, maybe Mercado Libre. They are kind of focused in Latin America. Of course, again, Korea is not Latin America, it's just one country. And then last thing I want to touch on it during the earnings call, obviously Coupang also has a subscription service, Rocket Wow here in this case. So the analyst asked, in the US, Amazon has been raising its Prime memberships monthly pricing or yearly pricing. Basically, is asking, are they going to do the same thing? To that, the CEO answered, our focus in WOW continues to be on creating extreme value surplus for our members. We want the benefits to vastly exceed the price they pay. We've added 7 services to WOW since launch. We're still looking to invest in more. We'll keep expanding the value proposition so that it is in excess of the price they pay for WOW members for years to come. That's our strategy and that's our plan. So basically, in other words, right now they're not looking to increase the prices, or at least not increases the price that much. They really want to show the customers, look, there's a lot of value here. It's a bit like Amazon did at first, right? Create a lot of value, save you a lot of money and time. And then once you're sucked into the ecosystem, you can start raising the prices. I mean, Amazon, even today, especially in Europe, the price is still extremely low compared to the value that you're getting. And maybe they're trying it out with Coupang there in South Korea as well. To me, makes sense. And so a little recap from their earnings report. So net revenue grew 10% year over year to over $5.1 billion. Active customers grew 7% to just under 18 million. Total net revenue per customer grew 3%. Total net revenue per customer on a constant currency basis grew 19%. Gross profit increased 64%. This is what the market really loved to see. Net income, well, obviously last year was a loss. Now we're in the positive. Adjusted EBITDA, also a big increase there. That was the big positive of this quarter. Let's see if these numbers can continue. And of course, a little look at the cost of sales. So it's really nice to see that total operating costs and expenses were, yes, they increased year over year, but to be honest, compared to the increase in net revenue, this was basically flat. And in this case, if we look at equity-based compensation, that actually decreased year over year a tiny bit. First time I'm seeing this quarter, to be honest. Now, for those that are just listening, I do want to read out these two quotes here. So our continued progress is a reflection of billions of dollars invested over the past 7 years to build an unrivaled network that integrates technology, fulfillment, and last mile logistics. We will continue investing in process optimization and automation, including machine learning and robotics, to deliver even richer experiences and lower prices for our customer. By the way, they have also the super fast shipping, which means like overnight it's there. You order it at night and it's there before you even wake up, which is crazy. We achieved another milestone this quarter, delivering record net income of $91 million across the entire business. Much of the recent improvement has been the result of investment in technology, infrastructure, supply chain optimization, and process innovation. We are proud of our teams and the operational excellence that they continue to demonstrate while creating new moments of wow for our customers. So in short, a very strong quarter from a probably forgotten stock and company out there. It's always nice to catch up with a company that I've covered during maybe the peak or the hype of the stock market. Probably also huge tailwinds from COVID, which pushed this company forward as well. But it's nice to see that unlike many other companies that are decreasing or not turning really a profit, net income profit here, they are doing it, and it's a nice surprise, and that's probably why the stock went up 25%. Now, I don't know how many of you still own the stock or if you ever own the stock, but do let me know down in the comments below. Do share your thoughts on the company as well. What do you think of it? Good for the future? Better options out there? Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.